In this video, I'm going to show you how you can use some very simple analysis to forecast where a trend is likely to end, so that while everybody is still piling on board that trend, you can be ready to exit your positions and position yourself in the opposite direction, ready for the new trend. Here we have an Australian stock, it's Commonwealth Bank, and this stock made its high up here in March, and then it started to sell off, and this looks like a classic 5-wave Elliott pattern. And if you're not familiar with Elliott wave, a quick synopsis is trends tend to have 5 waves and counter trends tend to have 3 waves. So whenever you see a 5-wave move, you can expect to see some kind of 3-wave counter trend that goes back against that trend, and then you can expect another 5-wave move in the same direction. Of course, this is very easy to see with hindsight, but when you're trading the market, when you're up here and it started to come down and sell off, and then it makes a small counter trend, and then it starts to come down here and it takes out this low, and our moving averages here cross over, it's starting to look like there's some kind of downtrend starting. So if you're long this stock, you'd want to be starting to think about getting out down here somewhere when it starts to break to new lows. But just looking at this trend here, you can see we've got 1, 2, 3, 4, the little ABC correction, and then 5 waves down. Then it started to rally, and we've got an ABC looking correction here, so we've got a 3-wave counter trend, and then it started to break down again, and then we made a lower high here. So looking back here, with the benefit of hindsight, if you didn't know what was coming here, there's a very good chance that if this is the counter trend high, and we've started to break down here, and we're making a lower high, and we've started to break down especially here, that this market is going to go substantially lower. Now, a way you can forecast how far this trend is likely to go, sometimes with deadly accuracy, as you'll see in this one, is by projecting this range from here to here, from the high to the low, from this counter trend high here. So we're looking for 100% of this range to be projected from here. And you'll see here we came down 23, 32, 50%. It gapped straight past 50% through 618, little tiny rally there, and then down we came to 100% of this previous range. So while everybody else is selling down here in a panic, you'd be starting to think this is coming to an end. The only problem with this is we don't have a completed 5-wave structure here. We've got 1, 2, 3, and then we had a rally. If it's going to do a 5-wave structure, you still need a wave 4 and a wave 5 down. So you don't want to be getting too excited down here, even when it's gapped down like this and it started to rally, that this is the end of the move. You want to have some kind of confirmation that the uptrend is starting. So right on cue, we hit 100% of this previous range. We rallied for 3 days. Then we had a bearish engulfing sell signal there again. We came down, we hit this 100% of the previous range. Another 2-day rally, and we came down, a bit of sideways momentum here, and then we eventually fell into this panic low down here, which just took out 100% of the previous range, closed on its low down here, which meant everybody who was going to sell had finally thrown in the towel and said, that's it, I've had enough, we're getting out of this. And that's when the rally can start. When all the sellers have sold, there's no one buying it, there's maximum pessimism in the market, that's when you want to start thinking about a lowers in place. Plus we've had our 1, 2, 3, 4, and this is a complex wave 4 correction, and this is wave 5 down that's finished in a panic sell-off. This is the kind of low you want to see in place before the market can rally. And then again, right on cue, it started to rally, make higher highs and higher lows. Bit of a sell-off here, and then we've started to rally again. So that's how you can forecast where a market is likely to end. Does this work all the time? No, it doesn't work all the time. Nothing does. But if you put these price projections on your chart and the market starts getting down towards 100% of the previous range, you probably don't want to be too heavy selling it anymore, because there is a good chance that the trend is going to come to an end and you're going to be in the wrong way if you're heavily short.